All right, everybody, welcome in. It's Tuesday, October 25th, a little after 10 a.m. Central. GM has just released their quarterly earnings report for Q3. And as a practice that I've done lately is I've been trying to study other companies' quarterly reports. If you're familiar with the channel, I cover Tesla quite heavily, but I'm trying to get exposure to other, my God, these dogs. If you're familiar with the channel, I study Tesla quite a bit, but I'm also trying to get exposure to other companies. And the companies that I really follow most closely are companies that are in the auto industry. And with GM's report today, it seemed like it was received quite positively by the markets, but I do see some red flags in the report, which I want to show you. And then I would love to hear your opinion as well in the comments and see if we can kind of figure out what's going on together. Of course, none of this is financial advice. It's just an analytical approach to see what's going on, to try and uncover the truth a little bit. But yeah, let's go ahead and get started. Technical ability. Ready? 3, 2, 1. Wow. So GM kicked off with this slide. Don't even ask. GM kicked off with this slide. Q3 highlights. So they kicked off with record revenue and double-digit EBIT adjusted margins. EBIT, for those that are not familiar, is earnings before interest and taxes. And then some other sort of jargon, I guess, about how well they're doing, so on and so forth. But that first block there, record revenue and double-digit EBIT adjusted margins, is one that's, I think, for them, since they put it there, they want to push the narrative that, hey, record revenue, we did really well. I'm like, okay, cool. So let's see what happens. So I started going down the slides, and I want to point you to two slides specifically that I ran into that I think are very important to cover. So this one's on page 17 from today's report. And this is GM's North America performance. So it's basically Canada, US, and Mexico all together. And on the upper left corner here, they have the net revenue, which is how much money they sold, right? How much they sold in basically their products, which is essentially cars. The columns are their total. And then the black line here, you can probably ignore. It's the wholesale sales, and it's in the thousands. So it's 784,000 versus 334.7 billion. So it's basically just a drop in the bucket. So forget the black line. But from Q2 to Q3, so last quarter versus this quarter, it went from roughly $29 billion to $34.7 billion, which is roughly a $6 billion increase, $5.9 billion. And then the other piece here that I want to draw your eyes to, which is what caught my eye initially to sort of dig in a little deeper and see what's going on, is the U.S. dealer inventory from Q2 to Q3 went from 248,000 to 359,000. If you're not familiar with the auto industry, especially in the States here in the U.S., auto manufacturers don't sell directly to consumers. They sell to dealerships. And these dealerships then turn around and they, I don't know if you've ever bought a new car before, especially a non-EV or non-Tesla, they haggle. They haggle like crazy, right? You got to go in, you got to do this dance back and forth and try and find the best deal. But once GM sells their car to the dealer, that counts as a sale. So GM can recognize that as a sale. So the car doesn't necessarily have to end up in a consumer's hands. They can just sit in the lot at the dealer, and GM would get to count it as a sale because their customer is really the dealer, not you or I, if that makes sense. All right. So that's what that number represents, is there's a growth in dealer lots, essentially, in North America, Canada, US, Mexico, whatever you want to call it. And then here's the next slide. And this one really sort of started ringing some alarm bells in my head. This is page 28 on the report. If you look at the first line, so this is North America unit sales. So these are actually unit sales, how many vehicles GM has shipped in the globe, separated by different regions, counted as deliveries in the thousands. So North America in Q2 went from 687,000, but it's down. It's down quarter over quarter to 663,000. So what's interesting there is that you have a pretty big revenue growth, right? But you have less units. So what that should say is that your average selling price has actually gone up quite a bit. You're selling less cars, but you made a lot more money from those cars. So each car has to be worth more. So I went ahead and I put these pieces of information together so we can use this to kind of start driving us towards what the whole point of this video is. In Q2, revenue 28.8 billion. Q3, 34.7 billion. These are in millions, that first row. So this first row here is a million. So it's 28 billion, 800 million so on, so on, so on. So 34.7 billion another way. Deliveries, which we just talked about, it went from 687,000 to 663,000. The dealer inventory, which was that bottom section there, this guy right here, okay, went from 248,000 to 359,000. And then our average selling price, which is a comparison of the revenue and the units sold. So this number here divided by these numbers here, okay? Our ASP has gone from $42,000 to roughly $52,000. So this could be mix driven, right? More pickup trucks. It could also be inflation. GM just has raised prices, which a lot of automakers have done in the past. And that's how they're passing these increased selling prices to the network. But here's where it gets super, super interesting. So we know the revenue is up 20%. We know it's up roughly by $6 billion, $5.9 billion. Our deliveries are down, but our dealer inventory is also up a lot. So what's going on here, right? So the dealer inventory basically says that from quarter to quarter, there's roughly a growth of 111,000 cars that are now sitting in the lots that made it to the dealers, but haven't made it essentially to the consumer. It's just there waiting to be sold, essentially. We got holidays coming up, so on and so forth. I'll go through the reasons in a little bit. But there is a growth in delivery in the inventory for the dealers, but they're shipping less cars to the consumer. So that's to the dealer. So that's a weird thing, right? You're getting more cars out there waiting for people to buy, but it's not because GM is shipping more. So what that means is that people are buying less cars. Should be pretty straightforward, right? The inventory goes up, GM is not selling as many cars, so that means that people are not buying as many cars. So that's one signal. That's a weird sort of thing that I noticed. But then the one that really stood out to me is if you take the dealer inventory, so the 111,000 cars that are sitting idle essentially on these lots, and then you multiply it by the Q3 ASP, so how much they sold those cars for on average in the quarter, you get some very, very telling number. So you would take the 111,000 cars that are surplus inventory, the ones that are just sitting idle in the lots of these dealers, and we times it by 52,338. So if we go back, it's this number right here, the average selling price for Q3. Okay, we get 5.8 billion. 5.8 billion. Does this number sound almost familiar? It's basically the same number that GM posted as revenue growth from Q2 to Q3, right? So what this could mean is that 98.5% of the revenue growth in Q3 is directly tied to the inventory growth. In other words, this number here, the only reason why it's up, it's because GM has moved it from their factories to dealers' parking lots. And it's not really at the end of the consumer. Now, let's sort of try to logic and reason why this could be. We've heard many times before from GM and other manufacturers, we've had a lot of inventory issues. We've had inventory issues. We've had a really tough time getting our inventories up because of supply chains, chips, so on and so forth. So cool. Okay, that makes sense. So maybe you're rebuilding inventory, and then this spike here, let's go back to the slide. This spike here on the lower left is just a reflection of you trying to grow inventories back up. Okay, got it. We also have Christmas coming up. We have a big holiday, especially here in the sort of the Americas, especially in the U.S. and Mexico. Christmas gets celebrated quite nicely, and you see all these ads on TV. What's that stupid like Lexus commercial with the person and the Christmas hat? I don't know. And Toyota has a bunch of them. You know what I'm talking about. Everybody loves buying cars in Christmas. That's what the commercials will tell you. So maybe you're preparing your dealer inventories for that. However, this is really, I think we really got to focus on this point here. The dealer has more expensive inventory while the consumer is tightening. So this is a very, very big point here. So that average selling price increase that we had, we went from about 42,000 to 53,000 or whatever that number is. Those dealers now are bearing the burden of having more expensive inventory. So the cars that they were able to sell on average, say with a starting price to them of about 42,000, now these are 53,000. But the consumer is expecting a lower price. And why do I know that? Great question. we'll use it as a proxy. This is a chart that I pulled from cargurus.com, I believe, but the source is highcharts.com on the bottom right corner. Thank you, highcharts.com. I pulled the used car sales, used car, not new, used car sales in the United States, specifically for Chevy. And Chevy is this blue line, Chevrolet, which is a GM sub-brand. And what's interesting to watch here is that one of the sub-brands for GM in the States, which is going to comprise a significant percentage of their sales in North America, in the used market, but we can use it as a proxy to the new market, and I'll explain why. It's going from about $30,700 per car, used car Chevy in the US, down to about $29,000, call it $250, $300, $400, something like that. Which means that the Chevy used prices from the beginning of the year have come down 7.5%, right? And it's really come down, believe it or not, really started coming down at the beginning of Q3. Which is where Chevy has started pushing more expensive inventory out to their dealers. Okay, so that's a little bit of a concern. So essentially, think of it a different way. With the used car prices, and I'll try to frame this properly for y'all. With the used car prices, they're going to typically behave less extreme than new cars, because used cars have a lot of depreciation already built in, right? You know this old saying, you go to a dealer lot, you buy a car brand new, the second you drive it off the lot, it's down, it's lost 20% of its value. It's true, because especially gas cars are depreciating assets. A used car is already bearing a lot of that depreciation. So when you go to, say, sell it to a different party, you're not going to take that big of a hit from a depreciation aspect, right? You're just going to take a hit on the mileage, and maybe you freaking drove into a deer or something, or a moose if you're in Canada. But as the used car prices come down, they're not going to come down nearly as much, one would think, as new cars, because a lot of that depreciation is already built in. And we're not even talking about the fact that as we go towards electric vehicles, people are going to fall out of favor with gas cars, especially with the incentives in the US that are coming down the pike from the Inflation Reduction Act. So there is a lot of variables here that tell me that dealers being stuck with more expensive inventory is a problem, especially as people are expecting lower prices specifically for gas cars. It's a big problem, in my opinion, a big, big problem. And so to wrap it up, I really think I'm going to keep my eyes peeled for the Q4 report for GM, and I'm going to take a look into their inventories and see if there has been any change. What I would love to see is that their inventories come down and they're able to flush that inventory out, which means that these dealers aren't stuck with a bunch of cars more expensive than they used to buy it for, and now the market is expecting much, much cheaper prices from gas cars. GM could, come up with different ways to incentivize these cars to sort of push them through the dealer network. They might give the dealer some discounts or something that they can then pass on to the consumer, but someone's going to lose out on that. It's going to be GM, because GM now has sold it for $53,000 on average. The dealer can't get rid of it, so GM has to essentially cut the price of the car through incentives, and then whatever profits they showed in this quarter are actually going to be nullified by whatever incentives they pass on in the next couple quarters. So for me, it's a red flag. It says that we are starting to enter sort of a different phase in the economy, especially around auto and specifically around gas cars, where we might have dealers that are stuck with expensive inventory that they can't offload onto consumers. And the car companies are essentially, I don't want to say they're stuffing the channel, but they might be able to report good earnings, but the dealers are not really the end customer. It's us. It's the buying public. And what I hope doesn't happen in the next couple quarters is that these car companies keep posting good profits, deliveries, but then the dealer networks are just stuck with a bunch of crap they can't sell. So I'm going to keep my eyes very close to this. I'm not saying this is going to definitely play out this way, but it's a red flag. For me, it's sort of opened my eyes to, okay, something's going on. So if you enjoyed this video, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. So thank you for doing that. If you want to subscribe, go for it too. And I also have merch in the description that you can purchase as well. I try to make it as cool and fashionable as possible, so make sure you check that out in the description. You can also support the channel by signing up for Patreon or through the YouTube channel itself by clicking join. Let's see if I can do this right over here somewhere. I don't even know if I'm putting it in the right place. But anyway, thank you all so much. Happy Tuesday. Let me know what you think in the comments. Am I barking up the wrong tree? Have I misidentified this? I want the comments to be as open dialogue as humanly possible. If you have feedback for me that can help me do this better, please share it, because then you're not going to hurt my feelings. But yeah, I'm very much curious to see what you have to say. All right, everybody. Mary Barra says bye. She's over here. Take it easy. Love you guys. Peace out.